and those lenders are selling the assets to the special purpose vehicle using traditional ways. Over time, we could extend the tokenization to the full transaction, but basically, that's a very important design question when you're creating your products. How far do you need to go with tokenization, and can you bridge TradeFi with DeFi, if we can use those high-level terms? Matthew, have some comments on this, or you have other use cases where sometimes the full transaction has to be tokenized, sometimes only one segment has to be?
Well, I think you said it the best, right? Like you're bringing the value on chain. It's not about what kind of happens after that. I mean, once you bring that value on chain and you connect the traditional space to the digital space, you will see new entrants come into the ecosystem to capture that value, right? And this is what spurs innovation. It's what we're calling our 0 to 1, right? We need to bring the value on chain, and that is what TradeTech has done. I mean, they are, the guys that they are the pros in this trade finance space to find that value, bring that real value to the digital world, and then after that, that's coming now.
Yeah, and I think everyone here in this room will be experienced in crypto. I think what we all have observed for too many times is that either the applications out there are a bit like a hammer looking for a nail. It's just you have this technology and I have to use it, and I really have to use it. But in the end, it's like trying to force sort of a square peg into a round hole. It does not necessarily make sense. And if you combine that then with unrealistic yield expectations and promises not been held, then there's no surprise that there might be sort of a bit of a question mark around the whole industry and what we're trying to do here. Moving away from this, there is a narrative, and we're shaping this together with XDC, where you can use this technology not only in a way that makes sense, but also in a way to create good. In a way that makes sense because, as Andre says, you do not have to force the whole transaction on the chain, because make no mistake, most people are still getting paid in fiat. There are very few people in this world who get paid in crypto and then can go to the grocery store and pay in crypto. The grocery store wants dollars or euros or whatever it is. And doing good is because trade finance, again, touches everything you see, almost every good, and because of the majority of the businesses who produce these goods are small to medium-sized businesses, they're really the local communities. So if you extend additional funding to these businesses, if you help them grow, you also help the local communities flourish. So there is a very strong narrative that actually using this technology helps the real economy, helps real people, and helps real communities to grow, to flourish, and to develop.
Thank you indeed. SMEs are often individuals in some countries running their own shops, businesses, and it's important to support them, in particular as the banks have had to de-risk for AML reasons, for regulatory pressure. So everyone is focusing on their core segments. New lenders are coming in to fund the SMEs, and the top banks are usually focusing on the top corporates and making sure they get all the bells and whistles that those large corporates expect. So it's all about client co-focus on your target clients. But that's good, because the new lenders that we see popping up, in particular in the UK and here in the UAE, they are very open to new technologies, in contrast to those top banks who have a long process to get regulatory approval to use new technologies. And that's where, basically, with new technologies, we enable indeed to do new things, as XDC does with TradeTech, and we enable new entrants to fund those SMEs. It's all about, indeed, those alternative lenders. And I'm sure what we're seeing in the UK and in the Middle East, we're going to see more and more on continental Europe growing, so that indeed the SMEs get the funding, but not necessarily from their main bank. But of course, the main bank will continue to be there to run the payments, the cash management, but the lending will come from specialized players. And that's what also from a commercialization point of view, it's important to position new capabilities for new players. Because changing what is working pretty well is very hard. Certainly convincing someone, like a large bank, to change what they have been doing for decades, if not centuries, to change that from a tech point of view would be decades, of course, and to change that to a new technology without major regulatory requirement will not work. So we are focusing really on helping those SMEs get funding from new lenders, and I found this region particularly exciting for that purpose. We are definitely on the XDC and TradeTech side focusing on those new players. Any question? You will get the opportunity to raise more questions to Matthew and Niels later today, but if you have one burning, feel free. Sal?
Where do you guys think the greater opportunity is in attracting crypto users to these yield-generating opportunities, or you've mentioned quite a bit about the resistance that the banks have to budge on the new technology front. Is there greater opportunity in bringing the banks to the new technology?
Yeah, I think it's sort of twofold. Thinking about investment, it makes most sense, I think, at this point to look where's the wealth in crypto and where large stablecoin holders, where people who have exposure there and do not necessarily want to leave that environment, want to stay in crypto but yet want to get access and exposure to real world assets that are denominated in fiat. And just as a side note to that, that's also very attractive because, of course, stable coins are by nature stable, but then are they, question mark? Hopefully they are, but there's always a risk of depegging, even if it's just temporary. There's always a risk of that. If you have all your exposure in that stable coin, you're basically out of pocket in a depeg event. If your exposure is in fiat, once the instruments become due, you get repaid in fiat, and that fiat gets converted into stablecoin. You get repaid in your stablecoin, so you'll get more of the stablecoin because the stablecoin is worth less now. So you're effectively hedged against the depeg risk. So you can create a hedged situation here while never leaving the crypto environment. So I think that it should be a very attractive feature as well.
Last question, thank you, Niels. Yeah, please.
Yeah, so I've actually, some time ago, been involved in a TradeFinex project. Back then it was still permissioned blockchains, and the project went pretty well, and it was a proof of concept, right? I think it reduced the compliance steps at banks from 80 to 35 back, huge efficiency increase. Instead of weeks of approval for lending out the money to buy the goods, it would be reduced to 1 or 2 days. And somehow it was shelved because the statement was, how do we get first mover advantage out of this compared to the other banks? And that seemed to be the thing they most cared about. So how do you get around that problem?
The financing, right, was the issue. There wasn't value on it. We probably had the whole thing built, but where is that actually money that's going to be lent? Like all we've seen in these markets so far is over collateralized loans, right? I have to have 3 times the amount of the loan to get a loan. Like that's not realistic. What TradeTech is doing through Securitize and on XDC is bringing value onto the chain. And when I say value, it means appreciation of an off-chain asset that just gets brought into the network as a single-sided staking or a single-sided yield. That's gone away, right? Like you haven't really heard single-sided staking in a while because it doesn't work. You're giving away tokens. But if you can bring in profit or appreciation from the off-chain space into the on-chain space, that is going to end up becoming a pool of capital that becomes recirculated and becomes where you can start to see under-collateralized loan obligations, where you can see mortgages, right? We have to get the actual money and the capital into the networks before you can have first mover advantage, in my opinion. Yes, to add?
Yeah, and I think it goes back a bit to what Andre said earlier, that he's dealing with resistance to change a lot. A lot of the banks have done these proof of concepts in trade finance, and I think the issue there is that, again, it's sort of the hammer looking for the nail. All I can gather from what you described seems to be a rather limited way of dealing with certain problems, compliance, onboarding, but it's sort of a very niche area on the one hand. On the other hand, if you do not have a lot of players accepting this, coming on the same technology, and really going deep, it's never going to work. Because, again, trade is real, trade is in fiat, trade is in paper, trade is messy. It's practices that are hundreds of years old sometimes. So how do you harmonize that? And of course, there's a lot of players who try to do this. It's very, very difficult. We're not trying to change any of this. What we're doing is we're getting more funding into the system. We're allowing people who have large exposures in stablecoins, who have an interest in earning real yield and putting these stablecoins to work in a sustainable way to earn these yields. And that's a fundamentally different approach. We do not want to change any trade practices. That's none of our concern. But we want to do the same thing that we have done very successfully in the real world by issuing billions of notes to sophisticated institutional investors, and do this in the crypto space. And there's a real opportunity to do this and to do it now.
Basically, you use a carrot to lure them in.
Well, it's not so much a carrot, I would say. I mean, if I think of carrots, I think of sticks, and they're usually connected. I would say is where can you go? Yeah, it's dollars, and where can you go and earn real yields in an asset class that has, I think, historically 2 basis point loss given default, where you can even sometimes, or oftentimes, not only sometimes, oftentimes insure the exposure with a credit insurer like an Allianz, and create further security and protection for the investor. Where can you earn these outsized yields? And trade finance is very specific because although it's huge, it's as an investment still niche in a certain sense. It's not widely understood, and that's where the opportunity is. There's a real arbitrage opportunity, and that's what we want to capture together with XDC.
Thank you, Niels. Always a pleasure. Thank you, Matthew. Always a pleasure as well. And over to you. Again, if you have more questions, Niels and Matthew will be back on stage in a few later this afternoon. But in the meantime, we'll proceed with more ecosystem partners of XDC Network coming and presenting their offerings. Sarwa, over to you.
Thank you very much. Thank you.
The SOA group, and me, I'm CEO for the SBI Ecosystem Network APAC, and Chihiro Kato is a CSO. CSO would be a Chief Strategy Officer kind of thing. And we also have an anonymous person. Kosuke Machida. He's responsible for the administration kind of things, and he gave 50% for our company. And a little bit in terms about our history, and in Japan, the XDC is shown on the May 2023, last year. And the XDC was listed at the SBI Basic Trade on the end of May. And then, XDC is operating very well after this listing. So the SBI group decided to building a joint venture with XDC Network. And then we built a joint venture December 2023. So now we are quite new. Even thinking, what every family shown on the banner, but still not. So probably it's shown a couple of months later. So actually here in 2007, 2018, big event could happen for the XDC in Japan. What's it survive? What's happened 2018?
2018. You joined.
Correct. I joined 2018 and XDC network and working for more than 5 years. But I actively working for the XDC group in 2018 and actually sleeping till 2021. And then SBI group approached to the XDC network and to listing XDC token, and I was involved in the negotiation with both SBI and between the XDC and SBI groups. And the other important things that happened in February in this year, she joined. And so a little bit introduce about our company, and SBI Networks is joint, as I said, joint venture is 6% stakes that are held by SBI Holdings. SBI Holdings is a SBI Group's company, the holdings company for the SBI Group. And XDC Network, actually the TradeFinex stake having a 40% for the stakes. We are headquartered in Tokyo. And this is a role for our company. As you said, expand usage, expand the collaboration for the efficient improvement for the trade finance. And then finally promotion and encouragement of the XDC recognition. So that currently, only a small percentage of people in Japan and also the APAC know the XDC. So that we try to expand our awareness for XDC in this region. So what we're doing for the expansion of the usage of the public chain XDC network is we try to make a collaboration and support the company and which develop the layer 2 product for the kind of things for the XDC network. But we currently just started our company, so we try to find the right person, right partner in this region at the moment. Next things will be implement trade finance kind of things. Luckily we get highly talented real world asset called Chihiro, and she has a lot of experience in the trading industry. So mainly she got involved in this kind of things, and she will explain what we are doing on this field later on. And then promotion. Now we from last May we focusing just only on the Japanese market, so that we don't. You guys doesn't really know what we are doing, but and from this year, we try to expand our activity to the APAC region from Japan. So now we pass to the Chihiro. Chihiro explain the detail for our current project.
Okay, thank you. This is Chihiro, Chief Strategy Officer from SBI XDC Network APAC. And I have a little bit about my background. I have a background in trading. Like I used to do the importing thermal coal from Indonesia to Japan, or the other mineral resource trading to Japan, or exporting from Japan thing. So I know the pain points what of the trade participants have, like us importer wise or the bank people. So I'm leading those POC within this using SBI network, SBI group resources. So as Tadashi explained, SBI group is a conglomerate, financial conglomerate, and they have they invested in blockchain called R3. So within the SBI group, we can arrange the POC and do the POC so quickly, and that's what we are doing at the moment. And as the first POC for the SBI joint venture solo, we are now doing this POC with Corda. Intel is providing the bridge with Corda, and we are trying to do the, prove the hybrid blockchain solution for us for the one-stop service. So we're doing the fiat payment generated by business-to-business transaction, but all the information is securely, transferred from exporter to imported through the Corda and then XDC network risked by Intel. We've been doing this POC for the last 3 months, then the outcome will be reporting soon, like in a month. So yeah, please just wait for that. But since we can do this, we can collaborate leveraging with all SBI resources. We are now calling for the other POC and other entry. As Tadashi said, there are many projects going on within the XDC network, but our first collaboration with XDC network, that's with the XDC trade network for the digitalizing the documentation for the trade. And as you might know, we are trying with this unique technology XDC has. We are trying to digitalize the bill of lading, the official document for the trade. So anyone who has this bill of lading can, change that commodity. That's the tokenization, and then that's like, so we've been using paper for the bill of lading. That's the bill of lading is the way of tokenization of like real world asset, but in a traditional way. But with this blockchain technology, we can trace and then do whole the digitalizing stuff. On the way we were flew to the Dubai, our luggage got lost, and when we went to to the airport, like they said like, okay, well I think they can lose our luggage, like it was force majeure, but they said like, we checked your status, but there's no track, and then they're like, oh my, you have to come back to the airport, and like we are coming back and forth 3 times or something. And but with this BL in the form of paper, we can lose, the track like that. But some bill of paper can worth like billions. So like I was in turnover business, and one cargo costs like billions. So if you lose you don't want to lose and you don't want to lose the track. So what we are doing is like we have friend, we have a nice friend in Singapore, XDC network, trade network. So he is calling all the participants use this network. But since it's cross-border payment, cross-border transaction, it is part of the outside Singapore, and that's what we are for. And with our network, we are bringing all the exporter and importer to the network. In that way, they can start using our network chain, and at the end they can ask for TradeFinex to the XDC. So we need to bring those actual trade participants who needs to be financed. So that's what we are trying to arrange. And so there's opportunity for the liquidity provider to join for the project, or you have the knowledge in the KYC. Because like we are like SBI group has knowledge in KYC and liquidity provider stuff, but all the regulation might differ from the country to country. So there's some place we can, collaborate, and that's something like between XDC Trade Network in Singapore and then we in Japan, SBI joint venture is doing. So in terms of MLTR, Japan is soon to adopt that regulation. So, so we are doing like ahead of adopting that regulation. We are arranging this POC, and we'll see how it goes. But like you have to, actually try it, and then how it goes with the actual business partners. So yeah, I think. Yeah.
Easy. Now is the time for a wake up. Good morning, everybody. So that's our presentation. Thank you very much.
How was the week like the whole last week? Enjoyed? Found it interesting, I think. Right?
Enjoying except for the flood.
Yeah. But that's part of the game. It's been like, whenever there is a crisis, it brings new stories to share for the rest of the life. So I think we all have now several stories to share. We saw this in Dubai. All right, so I'll get back to this topic of ours. Right, so I'll start with the introduction of our project, which is InvoiceMate. Very recently, 3 days back, we've been nominated, or we've been recognized as Deloitte's Rising Star winner. And of course, we are backed by the leading accelerator programs and the venture builders in the space of crypto and of course this region. I'll try to take it forward. It's not working. Let me try this way. Not working. Anyways, I'll use here. I was mentioning about invoices, right? Invoices, by the way, are world's most commonly used commercial documents. We have been having a talk about, okay, let's bring next billion people on chain. Bring them into the crypto ecosystem. Bring them into the Web3. How? Not been happening without bringing them or bringing their utilities on chain. And one of that is instrument of invoice. Every small, medium size, big size, private, public, government, every institution is working with the document named invoices. And invoices, by the way, are very liquid. They are supposed to sit on, are not supposed to, actually they are sitting on the balance sheet on the asset sides. And the receivables are coming in 60 days, 90 days, means illiquidity. And this illiquidity is in billions. And it's everywhere in the world, regardless of the sector. So what this is causing, it has impact on two segments. One is the business segment itself, especially the SMEs. It is avoiding them to get access to their smoother cash flow. And at the same time, it is impacting the on-chain investor and the conventional investor to get a product or opportunity to get the stable yields, secure yields. So that's been happening due to the problem of traditional centralized invoicing. Invoicing is happening for centuries now, but unfortunately it's still living in the past. Time to bring them into the current world, and that's the way forward. We can do it through tokenizing these invoices as RWAs. And with the help of TradeFinex, the XDC's protocol, that's what we've been doing for the last 5 months. And of course, in coming slides, I'll be sharing case studies, how we are making it easy for the SMEs to get access to the formal credit. How we are enabling the on-chain investor on the TradeFinex getting stable, secure yields. Right, let's go for the further details. RWA, a lot of talk. If you meet 5 projects, of course 2 or 3 are targeting that. So there's a narrative for last year or so now. We are familiar with BlackRock. We are familiar with Larry Fink, and it is expected it will be a $16 trillion worth market in 2030, or maybe it will even exceed that. On the other side, invoice financing, also according to the TradeFinex Global, it's a leading research channel on that side, will be more than $6 trillion worth market. Even today, it's 3.6 trillion. So market has demand, market has liquidity. What it doesn't have, it has been run on a infrastructure been underused of centuries old, centralized systems, fraud prone, having a problem of the lack of trust. So you need infrastructure, which again with the collaboration of TradeFinex and InvoiceMate, we've been showing to the world how with the decentralized infrastructure you can create this opportunity. This is how it looks like, the flow. Without going into the nitty-gritties or the nuts and bolts of the whole flow, invoices come on our invoice management system. Then we do a proper cryptographical encrypted verification with the help also with the AI. We then move it to the TradeFinex as a marketplace where already there are on-chain investors and they are getting their yield earned in a more stable, quicker, non-volatile and safe manner. So this cycle has been happening. TradeFinex come up with the tokenization, they come up with the listing and the pool creation on their platform and providing the opportunity to those who are not having access to the off-chain businesses. There are some other players as well, for example, helping on-chain and off-chain, on and off ramping as well. In next slide, I'll explain it further. In fact, one slide after this. I emphasize on the KYI, know your invoice. So this is what we do. We have blockchain here with the right utility. So the whole trail of the invoices from creation to the payment point or financing point goes on chain. Right here again, XDC comes in. The bots of ours come in to detect and prevent the frauds. And they also help to do quick KYI and do the invoice financing. This is the platform which helps the overall flow of the journey from businesses to the conventional or on-chain capital providers. So we start with the asset origination. We do the KYC of the borrowers and investors. Together with the TradeFinex, gather data, credentials, documentations, everything digitally. Loan agreement happens on chain and on the platform. Asset tokenization and management happening on TradeFinex. And importantly, we have a couple of on-chain, on-ramp and off-ramp OTC desks. So they help off-chain businesses to get money in fiat because they cannot pay their salaries and bills in stable coins. They have to use it in dirhams and dollars. And similarly, once they are repaying their loans, they have to do it again in the fiat currencies. And then of course, those channels come into the play. So that's how we play. We together play as a bridge role, and we are becoming a new frontier for the RWAs and DeFi revolution. Now let me come up with the 4 case studies here, which in last 5 months we've been successfully observing. The first one is the H&H. It was well publicized as our first pilot together, and it was a loan amount of $100,000. They of course do a lot of trading work, and for them extra liquidity or cash flow is very important for them. So already we have done I think 2 tenures and now moving for the 3rd tenure of the 2 months with them. So the impact that they are growing their UAE operations with a quicker access to the cash flows. Al Sayed group of companies, another UAE based company, started with them with $30,000. I think the tenure started with 2 months, another revolving as things is happening. The best part is that they are impacting a lot of businesses in Africa and also food sustainability as well. So it's an impact project which we've been helping, and they are doing a low procurement like for them, and of course bringing value to the their B2B relationships. Swap, OTC platform again based in Dubai. So they've been having different regions to cover, Turkey, Tanzania and all that. So again, $30,000 was the ticket size we started with them and moving on with the scaling it up. So again, for them, it's a SOP, standard operating procedure timeline got reduced with this access to the credit coming from TradeFinex through InvoiceMate. Trella, I think probably our best success story. $100,000, the first tenure got finished today and immediate repayment today. And tomorrow we will be doing the second round with them. So look, you cannot get your second loan in 24 hours or instantly. So this is only possible with this cycle of TradeFinex and InvoiceMate we came up with. So a lot of value. I just shared 4. I think I could have come up with 4 or 5 others as well. But this is the real world impact with the real world assets. But you need infrastructure for that. You need enablers for that. And this collaboration between TradeFinex and InvoiceMate is exactly what the off-chain world needs to get connected with the on-chain capital providers. Other overall impact of InvoiceMate in last 8 months, we've been live for last 8 months, is $4.3 million worth processing, finance processing we have done. Tokenized over $200 million assets, 1,700 registered users, partnerships with institutions, and 0 non-performing loans till date. This is the amazing team with me, enabling this ecosystem and taking it forward. Lastly, we never built it like a unicorn. It always was a camel-corn philosophy which we took from the day one. So that is for the balancing the sustainability part, and the go-to-market strategy was always towards growth, not towards burn. That's it from my side. We'd love to have more questions from you regarding this collaboration between TradeFinex and InvoiceMate bringing the real world impact. Thank you.
Are your lenders, via TradeFinex I guess, are your lenders taking the credit and the fraud risk as well?
That's a very good question. Yes, they have to bear, but not the full impact. There is a risk of around 50% for them. But at the same time, we are coming up with a new pool, which will be sort of acting as an insurance pool. So any bad debt happens, that pool will be coming as an insurance for the bad debts. It will not cover their entire value. But of course, when you are in the lending business, it has to be like that. But yes, the dent is not severe, and it can be absorbed through the common insurance pool, or we call it NPL cover shield, so non-performing loan cover shield. Yeah. Any further questions? Yep.
Thank you for the presentation. Can you explain how does working with you look like?
Another very good question. Actually, it all starts from onboarding their invoices, because that's the asset which is helping us to originate the loan. So onboarding the asset first, doing the KYI, so that is happening on InvoiceMate, and then once the successful or verified asset has been identified, we put it on a TradeFinex. So TradeFinex create it into a lending pool. And if it is a bigger ticket size, if it is smaller, they can do it through their own treasury. Otherwise, they will take it to the community. Community will see it as a fractionalized status. Like if there is $100,000, they will see it in 10 pieces or maybe 100 pieces. So not like it's a peer-to-peer financing from our investment from their side to the borrowers. So the cycle is like that. So onboarding, then KYI or due diligence, and then reaching to the investors through TradeFinex. We can take one more question, and then I'll take further questions off the stage. Perfect. So thank you so much for listening. I'm looking forward to see you after the break.
Thank you.
I'm Jignesh, and I'm looking after the Comtech Gold project, which is tokenization of gold, which is the first real world asset tokenization in in the UAE, or you can say in the region. And we have started this project 2 years back, around May 2022. And since then we have actually tokenized 145 kg of gold, which is 145,000. And the governance that we have built is around DMCC, which is the Dubai government, who are helping us to get these tokenization done in terms of providing the support through trade flow warrants. So more to I'll discuss when we will be discussing on other points. So yeah.
Yeah, thank you, and hello again. And if you were at the first presentation, maybe you have thought about a few questions. I'm very interested to learn those. But I'm Niels Behling. I'm the CEO, one of the founders of TradeTech. We do basically tokenization, but also otherwise making trade finance investable. So we allow investors and originators of trade finance assets to connect, interact, and to transact. We put trade finance into capital markets. Oops, I think I need this one as well. Into capital markets. To date, we have issued about $3.7 billion worth of traditional securities, and we're extremely excited to now be working with XDC on also tokenizing assets in this space. And I let Matt do his introduction.
Yes, I am Matt, again, director for the XDC Foundation. Handle partnerships, integrations, basically any support for the protocols and businesses building on the chain. You guys feel free to ask away. Any questions you have?
Thank you all. So indeed, we're going to continue talking about real-world asset tokenization using the XDC network. We're going beyond trade finance, although you have Niels and Matt here focusing on the trade finance use case. And the first thing I'd like to highlight is what we have launched about 5 years ago in terms of creating a community of trade finance lenders and investors active in bringing, indeed, in making this asset class more liquid. And this is called the TFD initiative, Trade Finance Distribution Initiative. XDC Network, the foundation are a member of this. TradeTech is a member of this, founding member even. And basically our goal, and we have now many proof points, is to demonstrate how an illiquid asset class, such as lending, SME financing, trade finance, is becoming liquid. Why is it becoming liquid? Because it is becoming accessible. And accessible not only for the big boys, the big asset managers like Goldman Sachs Asset Management we have in the community, but also for family offices and even down to retail investors. So that's the purpose of this initiative that has become actually a community which is bringing proof points from lenders, from investors around the transformation of this asset class into a liquid asset class. We're targeting many of you, lenders focusing on SMEs, we just heard from InvoiceMate. We are targeting family offices, we are targeting funds, those that have the liquidity but are looking for yield with no risk or little risk, because trade finance, as Niels said in the previous panel, has a very low risk and is highly diversified. So if you are active in lending, SME lending, corporate lending, at transaction level, loans, trade finance, if you're a B2B platform, enabling corporates to trade, and you want to inject liquidity into transactions like you would inject credit insurance, this is the community to join. There's no business behind the TFD initiative. It's all about demonstrating and attracting more liquidity, because like InvoiceMate is doing, you need to approach the SMEs with new platforms. And that's definitely, so we need more lenders, more institutional investors. And we have seen also in the region, indeed family offices setting specific funds to focus on this new asset class. Of course, it can be integrated into a fund covering multiple asset classes as well. So I'd like also to focus on this ambition we are all here for, which is all about bringing new technologies to doing new things, not just to replace what is working pretty well. And you're becoming much more attractive as a business if you can demonstrate that the use case you're focusing on is actually really introducing something innovative, not just changing what has been going on for 50 years. So with this introduction, this is an invitation for you as a lender or as an institutional investor funding offices to talk to me about joining the TFD initiative and discovering where are the investment opportunities or the new investors you could be working with. And this is all about indeed demonstrating that we are expanding the market, making it more attractive, more liquid, which is all about the commercialization strategy. So maybe I'll start with Niels around the commercialization strategy, the tokenization. Which kind of investors are you focusing on in terms of attracting on the new token that you are preparing and aiming to launch soon?
Yes, thank you, Andre. And I think one before I go into this, one thing that stuck with me from the previous presentation that I found very interesting, and thank you for that, is how do you generate value for a network, and how do you get this critical level of adoption? Because of course there's a lot of blockchain projects out there, and as we all know, only a few of them will succeed. So how do you make it succeed? And I think bringing real value to the chain and to the network is what it's about. And by real value in this case, what we're doing is looking at the real economy. And again, it's about this theme that I mentioned previously. This is not a hammer looking for a nail, but this is something that makes sense. You have businesses that need funding, you have investors, and that goes to your question actually. You have investors who have stablecoin holdings who want to put these to work in a way that doesn't gamble away the house or the holding. And how do you do this? And this is what we're offering with Yield Tech, as the project is called, and together with XDC, is opening a path for these investors to access TradeFinex, which again, historically is one of the safest asset classes. It's also one of the asset classes that many people haven't heard about because the banks have very closely played the cards to their chest. But this is a 2 basis points loss given default. So if anything should default, there are about 2 basis points losses. That's almost negligible. Other asset classes have percentage points of losses typically. So this is where we're operating. At this point, we're looking at accredited investors only. So these have investors who fulfill certain minimum criteria set by the SEC. The reason for that is regulatory reasons. We don't want to fall on the wrong side of the law. We want to make sure that we only deal with people who are sophisticated. The rules by and large is you have to have either $200,000 annual income over the last 2 years or $1 million worth of assets. If you're married, $300,000 joint income is also fine. But that are sort of the guidelines. So accredited investors who are invested in stable coins will look for a way to lever these stable coins in a way that is sensible and that creates a real benefit to the real economy. And that's what the project is about.
Thank you. Thank you, Niels. So indeed, the technology allows to do much more, but complying with the laws is essential indeed. And I guess this is all about what Securitize is doing when onboarding investors, making sure they comply with the applicable laws as set by the SEC. Okay. Yigesh, on your side, you're not focusing on TradeFinex, but another real world asset, gold. Tell us, what is this use case all about? What kind of investors are you targeting? And did I hear recently that HSBC has been tokenizing gold in Hong Kong? Is that
yes?
true?
Yeah, it's true. That news is absolutely true, where HSBC has announced in Hong Kong, and they are also looking out in London as well to tokenize gold. And when you said TradeFinex, why not TradeFinex? Because what's better stable coin than a gold coin? So we can use over there as well. So coming back to your question is like, how are we getting into getting more investors? And so our target is not only the retail investors but also institutional investors, where they want to actually hedge their portfolio, because as we all know, whenever there is a problem anywhere in the world, could be a situational or natural calamities, or you could say a war situation, the gold is, which has always been, people want to secure as much gold as possible. So what's better than gold? In fact, it's like gold is the starting point, I would say, and there are like other commodities also which we can use as to tokenize it, which we have already done for silver. Now coming back to gold, as I was saying, that's the best thing to hedge over your portfolio, and to cover all your whenever the markets are downside. If you say whether it's a crypto market, it's a conventional market, or any other market, if you pick up from, you can say, just a new person going out of the college till the person who is 80-year-old, and anybody is investing into, if you ask him what is the asset class that you would be investing into, people will start saying, youngsters will say nowadays we invest a lot of things in crypto, mid-age guys will be using more of the banking stocks and IT stocks, I would say. But in all the range, I would say they will always have some bit of gold portfolio in them. So that's it.
Thank you. I have more questions for you, but I'll be back in a minute. Matthew, there was a question around private, or a statement even from someone in the audience claiming that private chains have failed. Personally, I wouldn't dare to say that, but I don't have the expertise to be that specific. What is your view, and how does XDC play in this private-public debate?
For sure. So I think it comes down to transparency and decentralization and the key principles of this network. So to keep it private is more of the same. And it comes down to accessibility. So just what they're doing at TradeTech and what we're doing at Comtech Gold, it makes my job easy, because essentially we're trying to gain access to these real world assets, because what it opens up for is new ways to invest. So if I can just put up capital, earn yield like I would in the regular space, I can look at how can I invest in projects building within the digital space. So if I want to be a VC, if I'm a VC and I want to give a grant, I can actually give monthly stipends, because now I'm just investing in these real world assets and reinvesting the appreciation of my investment. We can look at token launches. You can look at ICOs, building these into their token models. We have a token sale, but 20% of it's going to be a hedge into a gold TradeTech fund, right? Because this right now is the 0 to 1. Getting the value on chain and everything we've been kind of talking about this whole time is to enable what comes next in the private part of it. So I'm from the community from 2017. And a big part of this is not just having rich people stay rich. It's having the value enter for the average person to utilize to enhance their life. And that's what they're doing. And this is just the step 0 to 1. Everything else comes after that.
It is true that by using tokenization, we make various asset classes, including gold indeed, much more accessible. We given this example of real estate earlier. If you can't afford the full building, of course, you're not an institutional, you can't even afford a studio, then you can afford a piece of the real estate and get the yield out of this asset class.
Exactly.
We're saying, with the example Niels is focusing on with yield tech and the tokenization of trade, you as a retail investor or non-accredited or a small investor that are accredited in today's regulatory terms, you don't want to chase those SMEs that InvoiceMate is chasing, but you want to allocate liquidity to those who are in contact with those SMEs. So we're opening up markets to new investors, and of course the regulatory boundaries need to be respected. So sometimes we can go to indeed retail, sometimes we can't, but at least the rules are quite clear. So it's all about indeed finding the use cases where we can offer accessibility to various existing or new asset classes to new investors. But as you say, it's moving from 0 to 1 is doing more things. And I was thinking about the tokenization of gold. Could we use a tokenized gold as a collateral in trade finance transactions? Because collateral management is essential. And personally, if I was a lender, I would prefer tokenized gold than a bill of lading, so of a shipment on the Pacific Ocean. So is that something that we could combine, gold tokenization with trade finance use cases?
Yes, why not, I would say. Because what is the asset class that you're looking for, trade finance? A stable coin. And apart from USDT, USDC and all these things, what else can give you the stability apart from gold? So that's the only thing which you should be looking at, because it is, once you have this USDT, USDC, they will be at a particular level. And I would just give an example. If you have, say, $10,000 worth of USDT 6 months back, what would be the value today? Can anybody guess? It would be $10,000 only. But if you would have gold, which was trading at 1800 per ounce, and today it's 2500 per ounce. So you can just see what is the appreciation that you're getting in gold, then just locking your funds in just a normal stable coin like USDT, USDC or any other stable coin.
Yeah. At least there is no de-pegging, as Niels was saying earlier. The risk is lower, I guess, on gold than on non-regulated stable coins. Niels, would you see any use case for tokenized gold in your area?
Yeah, I think it's we're probably coming from a same sort of vantage point, but going at the issue of how do you present returns to investors in a different way. Gold is very much a capital appreciation game. You want to buy the gold, hold it. Typically, if you buy physical gold, I think you're about 5% out of pocket once you bought it before you can resell it. So that's actually something that makes your product very attractive. But it's about capital appreciation. But the question is, if I'm an investor who has stable coins, want to stay in stable coins, but how can I earn real yields? And real yields, I mean yields that are not generated just by some promise where someone goes out and says, oh, give me your stable coins, I pay you 20%. And then you ask him, how do you do that? Well, that's our secret sauce, but thank you very much. If you do not want that, then there's not much out there except what we're offering with YieldTech and XDC, which is backed by real world assets. So you get exposure to a basket of invoices that are generated by real businesses. You have full visibility on these invoices. You know who delivered goods to whom, what these goods are. These invoices need to be paid within a certain time frame, and you can participate in the commercial return that's generated. If you then also overlay this with a credit insurance, which happens in the world of invoice financing quite a lot, there are specialized credit insurers like an Allianz who we work very closely with, then effectively you're generating AA exposure, very highly rated exposure at loss rates that you cannot find otherwise. And then again, it's no wonder that the banks have very much kept this to themselves. But now more and more investors are coming into this field. You mentioned Goldman Sachs Asset Management, which happened to be a client of ours, but there are other investors as well who are launching trade finance funds. It's something that's opening up. It's a market that is ripe for disruption in that sense that more capital is needed. And if you then use a trade finance focused blockchain like XDC to make this happen, to also tap into the stablecoin holder market, then it's really a very, very attractive opportunity.
Thank you, Niels. Any question? Because actually this is a Q&A. Happy to continue, although we're getting to the end of our time slot. But any question from you? Yes, please.
So just on the credit insurance, this is something that you are taking responsibility on getting. So just on the credit insurance, this is not being brought in from the SME side or the originators of the invoice. This is, you are aggregating those and have a deal in place from the companies that you mentioned.
Yeah. Yes, a very good question. And what we're doing, I think this is something that's very important. We're not buying individual invoices and then repackaging them invoice by invoice, which would be very cumbersome and not very efficient. But what we're doing is we're aggregating portfolios of underlying invoices and making sure that the money that an investor has put in is always put to use. Because if you think about it, and I'm going to answer the question in a second, but there is a bit of explanation needed. If you think about it, invoices have a payment date. 30 days, 60 days, 90 days, and if they're paid off, they're gone. The invoice doesn't exist anymore. So what you have to do in order to generate the returns for the investor, you have to continuously replenish these invoices. And that's what we're doing through financial structuring effectively. And that's also where the credit insurance comes in. This is something indeed that we're putting at our SPV level where we do the aggregation. That's where the credit insurance is put into place for the benefit of the investor. And credit insurance, again, what does it mean? An invoice has a value, say 100, it gets funded at 90, so you pay 90 for the invoice of 100. The credit insurance would, however, insure 95 of that invoice. So if the invoice defaults, not only is the 90 that you put out fully covered, but you even have a 5 buffer, because again, the credit insurance that I'm going to cover up to 95, you only fund at 90, so you're over collateralized. And that's why it's so attractive. If you combine that with the low loss rates that are even without the credit insurance there, then it becomes a very, very attractive proposition.
Very attractive, very stable in terms of continuous flows, very diversified. I will reuse one of the other arguments I forgot to mention earlier. You mentioned low cost to entry.
And scalable.
And scalable, yes, as Invoice Mate and others are. Connecting more SMEs and bank de-risking, more indeed SMEs are getting financed and indeed. Any other question before we close? Because we have more to share with other speakers.
Can I have?
Yes, please, you may.
I just wanted to ask that what's your, I would say, your vision for the next 5 years around RWA, specifically in your domain? Since you come from a finance background, I think you might have a decent understanding of that compared to all of us. So I would just want to know that, because we're in the same space as well.
Which company are you?
Yeah, if I maybe it helps to think 5 years back to see where we are back to then. When we first started, Andre and I and Mattia, my colleague here, we started talking about making trade finance investable. There are a lot of investors that are now in trade finance that we're not really sure what you're talking about. We don't understand this. We're capital markets people. We buy bonds. We buy all sorts of products, but we're not buying trade finance. And that is changing. It hasn't fully changed yet, but it has changed very much over the last 5 years. And if you think about other asset classes, if you think about mortgages, student loans, credit cards, anything can be bought and anything can be very easily invested. Trade finance is not quite there yet. So I think my vision, expectation, firm belief for the next 5 years is that trade finance will be a mainstream asset class as all these other asset classes. There's always a bit of a push, but if you think back to the first ETF that was put out there, people said, we don't really know what this is, a fund that links to equities, how does this work, why does it make sense? Well, now the majority of investments of the largest asset managers are in ETFs, and that's something that really shows if it makes sense, it will happen. This is something that 100% makes sense, 100% going to happen.
Thank you, Niels. Good. Well, thank you very much, Yogesh, Niels, and Matthew, for sharing your insights.
Firstly, I want to thank you, the speakers. Thank you for joining us. So, the whole day today we have been discussing about real-world assets and discussing about new asset classes and how tokenization can bring in new form of asset class and diversification. And the most important thing about that is liquidity. And within the liquidity, we've got amazing panels over here who can actually discuss more about it, that where the liquidity is coming from, how can we be able to basically have this continuation of this liquidity. So yeah, firstly let me introduce, you can just discuss yourself.
Hello everyone, I'm Arturo Cantera, CEO and founder of Prime Numbers Labs. About Prime Numbers, we have an NFT marketplace built here on the network. We have a lending and borrowing protocol and liquid staking. And in the lending and borrowing protocol, we will support real world assets. So that's why we are here today talking about a lot of real world assets, and let's discuss more in the panel.
Hi everyone, my name is Mana Rifki. I'm a VC investor from Krumi Ventures. We just got the first license from ADGM for a VC investing in all Web3, means token and equity. I'm also doing some research on the academic side, and I'm advising some of the RWA projects in Hong Kong and Singapore. Thank you for sticking around, and looking forward to learn from my fellow panelists. Thank you.
Hey everyone, so Tyler Carter, co-founder of Fathom, but maybe I should say DAO representative as it's fully decentralized. So we are an RWA DeFi protocol. The message is basically DeFi is a distribution channel for tokenized securities, tokenized RWA. We have a CDP stablecoin that is backed by RWA. We have a stable swap DEX. We have a vault product that basically allows people to instantly mint a tokenized version, like a tokenized ETF based on whatever basket they choose. So decentralized create redeem process for ETFs, and we have RWA borrowing and lending as well.
Thank you everybody. Thank you for providing us these kind of infrastructures. I mean, you guys are building up something very interesting for the future, as we were discussing earlier about it, the infrastructure of it, and like the discussion was coming up that in 5 years of time, this is actually inevitable that this industry is going to engage in real world assets. So I just want to start with you. How do you think that liquidity, because in the real world class as well, with invoices that we've discussed with TradeFinex and all, they're bringing in these kind of liquidation, how Prime Numbers can be able to provide that stability and confidence to the investors?
Thank you. So about Prime Finance, that is the protocol that we are building that will bring this real world asset liquidity. Let's think about Aave and all the TVL that they have, around 18 billion right now, talking about all Web3. About real world assets is so much bigger. All of these real world assets are going to be tokenized, so they will go to the, let's say, traditional crypto, because it's not traditional, because it's really new, all of this. So you are able to put as a collateral these real world assets. There is going to be like different pools with USDT or stable coins in this case, and you are going to be able to borrow with the collateral. So with this borrow, you are going to be able to use whatever you want to increase your let's say EPI in different staking protocols, and then you just need to pay back the loan. So yeah, put these real world assets as a collateral in a lending and borrowing protocol similar to Aave.
Prime numbers is also involved in NFTs as well. So this is another aspect of liquidity that you can, but there are risks assigned to it, especially with terms of bringing more investors into the Aave. How does Prime numbers combat that challenge?
So we also have Primeport, that is NFT marketplace. So some of the real world assets are NFTs. They tokenize, let's say, real estate. So you are able to sell and trade this NFT also on the NFT marketplace. And about to get new users. I think this opens the door to the also retail investors. Let's say in the case of real estate, they are going to be able to invest to do fractionalize. You're going to fractionalize real world assets. So you're able to trade everything in an NFT marketplace, or let's say also talking about lending and borrowing, you can put there fractionalize real world assets, for example. So I think the opportunities are really big in this ecosystem when you have a clear infrastructure about how to use everything.
Thank you. You are actually working at CBDC, and so with that, within liquidity, one of the ways to come up is fractional ownership. And the new form is also coming up, which is getting popular, is now staking. How these kind of things, CBDC can engage interaction with the investors and provide some kind of sustainability into it?
Sure. I mean, I don't believe that CBDC is the way, to go and have a certain, exposure for either retail investors or institutional investors. I think we are seeing a lot of bank deposit, tokenized bank deposit. That's the way to go. Circle as well. They are doing great work with multiple institutions. So, and last but not least, I'm very close, or like I live in Singapore and Hong Kong, and I guess the government of Hong Kong is doing a lot of regulations around digital assets. So we are seeing with the HSBC the tokenization of gold, but also something called short deposit treasury bills. So the tokenization of treasury bills and making it as a collateral. CBDC is coming for retail and wholesale central bank on a central bank level, but for the RWA, I don't see that's the way to go. I guess we have a lot of products within the market now for the projects that I have mentioned and the entities that I have mentioned, that they are way more suitable for this kind of asset tokenization. And again, the problem that we have is the interoperability between these networks, right? As much as I'm advocating for the real world asset tokenization, however, we have to keep in mind that we are still in early stage. The first step to go forward is the regulation. So as long as we don't have clear regulation, we can't do much. We have mentioned a lot during this conference about real estate tokenization. I don't know, for me, I see it like, with the existing infrastructure, financial infrastructure that we have through a REIT and tokenizing a REIT, that's more than enough for the average or the most sophisticated investor. I think, by adding more technology, sometimes we are adding a layer of complexity, especially for the projects that they have an operational side. So I guess, this kind of education for the investors and also the technologists, it's very important because not everything can be, RWA. If we can work with the existing frameworks and again, putting in mind to have a clear regulation framework. That's the most important, rather than just jumping into how we can, add a DeFi or add, a decentralized element. Don't get me wrong, I love anything, degen, decentralized and everything. However, for these kind of projects that they have more, we are bringing more a layer of risk rather than facilitating, investment. So this is why it's very important to keep in mind what is the goal. It is to attract more investment. The regulated investors, they are not willing to put more risk in an existing risk framework. Investment. Risky investment. Right. So this is why we have to have a clear framework. Either we want to tokenize an asset with the existing tools that we have, through an SPV, for example, or any traditional way, rather than making more complex the investment. For the DAOs and the DeFi, if we see the active numbers of DeFi users, it's just 100,000 users across many active platforms. So I don't see if the most institutionalized investors are ready to go through that risk. And there are a lot of hacking happening, the lack of regulation. This is why we have to keep in mind to converge between the existing financial frameworks that you have already, and then maybe USDC, Circle, they are doing great work with the government and regulation. So responding to your question, CBDC is not the way to go. Rather, maybe tokenized bank deposit, tokenized bank deposit, or Circle, as USDC, but not Tether, for example. So yeah.
Yeah, I'll just build you. You said one thing that stuck out to me, and that's just how early we are, and I don't think people really realize this, but crypto to date's really just been like an experiment. We've hit a couple trillion in market cap, but I've seen more now. Before I started Fathom and Desync Labs, I was head of digital assets at Securrency. It was a top 3 tokenization shop. We did the first tokenized securities through the SEC. But we were also doing DeFi stuff. So we rebuilt the securities lending business line using a no-code tool for State Street Bank, and we had guys up and running and deploying, DeFi protocols for SEC lending in 2 days. And their estimated cost savings just for this one business line was $1 billion a year. That's the type of thing that's about to happen to finance. So just wanted to give it some scale, despite the challenges. But yeah.
Just to add on that, like earlier we would be discussing about bringing in real value on-chain networks. And through these kind of, like you talked about, these saving of these costs for new business lines, how do you feel that new value can be provided, real-time value can be provided on-chain networks, given that we are just the beginning in this industry? And only few asset classes that we can right now engage because of the regulatory aspect. So in your experience, how do you think we can explore more industries?
Yeah, so you bring up something good, and this has actually been a big issue for tokenized securities to date. A couple big firms have tokenized a decent size of inventory, but it just sits on their books. There's no way to use it, there's no volume, there's no users, and maybe this is too much insider information, I won't share that firm name, but there's an abstraction layer coming for tokenized securities, so anyone will be able to use them within DeFi, and that's coming now. And this is why you see BIDL get set up, this is why you see Scope get set up on Securitize. That money is starting to move in, and they plopped 100 million down first time off. This is not a bad start.
Talking about what you've been just discussing, how Prime Lab is basically involving arts, culture, and this kind of sectors into DeFi and bring liquidity, especially towards, we were just talking about the entrepreneurs and businesses, but I think artists would also be needing capital, and how can Prime Labs can provide liquidity to them?
So just to ask something to you first. I think all the liquidity is coming, 100% you see with this lot, 100 million that comes in. But I think we need to make blockchain safer. I mean, talking about the hacks in DeFi protocols, exploits, scams, everything. We need to make not the popular opinion, but also the business opinion so much clean. Because right now, if you talk about crypto and blockchain, meme coins, a lot of things that are not attractive for the, I want to say, real investors or big investors. And now to your question, sorry, about art, luxury, real world assets, all of this. There is some technologies already with NFCs that you are able to get a real world asset, I mean a luxury asset, and then convert it to an NFT, and then you are able to trade this NFT in an NFT marketplace. I think also adding this as a collateral, for example, yachts. I think the very beginning of all of this tokenization in art or luxury items will start with these big firms, let's say big brands, like, I don't want to say anything but Louis Vuitton, Ferrari, these big partners that need to do the first movement to be able to have all of these real world assets in blockchain.
Coming back to the role of CBDC and your capacity, you just shared that it's now coming up ADGM as well. How do you see securitized models coming in UAE, and how much liquidity is provided and available over here?
Sure. I mean, given our experience by challenging, the regulators, but I guess the UAE is such a beautiful country to be in, and is like, given the, I mean, if I have to compare between the discussions that we had 1 year ago and us having the first licensed VC to invest in everything, I guess they are very willing. They are willing to be creative and to listen to the industry experts. So we were very fortunate to have direct, contacts with the FSRA, having a lot of round tables, and within like 6 to 8 months, yeah, it's a bit long to seek for a VC license. However, we really appreciate how they have been willing to change the law, and they did. So this is just, from the VC perspective. For securitization, I think we already have many projects coming and being licensed by VARA. I haven't seen many, I'm just not aware about a lot in ADGM. However, within the UAE, I guess VARA is doing great work by regulating some of the RWA projects within the infrastructure or the fractionalization of ownership. For the liquidity, again, we are talking about very sophisticated investors. A lot of education should still be in place to educate the existing investors, because in the end of the day, we don't want only the crypto or the blockchain savvy investors. We want the traditional investors to come in, because one problem with RWA is also the secondary market. Yes, putting your assets on an exchange, on a regulated RWA exchange is great, but how about the next level, to finish the cycle? So I guess it's very important to get more traditional investors within the ecosystems, because they are the secondary market. That's what creates the real liquidity. Otherwise, we will be just stuck with assets that they are tokenized, but there is no demand on the other side. I think not only in the UAE but worldwide, maybe in jurisdictions like Switzerland or Luxembourg, we have seen a lot of securitization, for many years. This is why, for me, going through the traditional way of an SPV and tokenized fund is way easier for the traditional investor to understand it, and maybe adding, of course, the layer of technology that makes things easy. But I guess it's a problem worldwide, but given the fact that BlackRock, JP Morgan are leading the way, it's a very good green signal for the future of tokenization.
I just wanted to ask with the Fathom, like we've just been discussing about the lack of market depth because of the understanding, the awareness, and the technical barriers also, like we discussed about the blockchain's infrastructure getting penetrated by hackers. How Phantom is basically providing this solution, like overcoming these challenges and be able to provide liquidity for lenders and borrowers.
Thanks. Yeah, to one thing that you were saying too, no one has built a market that connects the buy side to the sell side yet in crypto, especially for tokenized securities, I mean specifically. And this is the biggest hurdle. That's why we were building, DeFi out as a distribution channel when I was at Securrency, and that's, what we do with Fathom now. But to your question on security, I look at security as like a 3-stage process, and in crypto, the 3rd stage isn't really an option. So you can do audits before you launch your protocol, and then stage 2 is once your protocol is live. Stage 3 is after a hack. So pretty much you only have people focused on stage 1 now. So we've done multiple stage 1 audits. Yes, you do need this as well. But the newest thing sort of coming out, and we're linked up with a few, is someone that live monitors the protocol as it's running and can take action to shut down exploiters. And literally, I wouldn't even use a protocol that's not, at least pivoting that way. I think it becomes ubiquitous very, very quickly.
And about the market depth?
Yeah, I mean, market depth gets solved pretty easy once security gets solved and once RWAs are tokenized and moving freely around DeFi. So I think DeFi, the ability to use tokenized securities in DeFi is really sort of the start of this flywheel, and we haven't seen it start yet. So that'll start happening, pretty much now for the next several decades.
Thank you. Well, thank you everybody for your contribution and sharing us with your insights. Anybody here does have any questions to raise to the panel? Yes.
Hi, it's Kelvin. I run Fusan Exchange. I'm just curious about the DeFi protocol. Do you KYC the underlying assets then? There's no KYC on that?
I need the mic.
Exciting question.
Nah.
Yes.
We're fully permissionless. And look, I've been dragged into a lot of lawyers' offices over the past few years by other people, not myself, to discuss this. In the end, we spun out of Securrency to really remain permissionless, and this was a massive gamble for us. But the new solutions about the abstraction layer that I was mentioning earlier means that this was the right gamble. And now when you go talk to a tokenized securities provider, the person who does all of the actual tokenization, they only want to work with permissionless protocols. Cool, there are some neat new protocols that instantly KYC'd and gate capped, but that's not an innovative product. That is the same finance that's been happening for hundreds of years just on a website. So I'm very pro permissionless, but yes, you need an abstraction layer to someone who's doing, KYC, AML, but it's too much of a barrier to make users do it for DeFi use activity. Sufficient?
Anyone else? Yes.
To Manal, you mentioned the educational programs for the regular investors. So do you know if the government is planning any initiatives? Are there initiatives to scale this knowledge here in the region?
Yeah, great question. I guess there are a lot of roundtables with industry experts. That's what I have seen, but it's a great point, I think we need more education programs, like more structured. I guess with the people, great minds that you have in the room, I'm sure, we can think, about something in those lines. Yeah, great point. But what I have seen so far is mainly roundtables with industry experts to share, knowledge, but nothing really not a structured education programs, for example, for the investors.
Yes, anybody else? All right, yes.
What kind of real estate contract or NFT you got? Can you explain
more?
So we are also a decentralized platform. Basically, we will provide this through partners. Let's say context gold, half gold, tokenized gold, real world asset. We are going to support all of these tokenized assets because at the end, in the backend, they are ERC 721 or ERC 20. So for us, it's really easy to support them. I mean, we, as a company, we are not going to do the tokenization of the asset. We will support tokenized assets that are tokenized from different business or partners.
Yes, well, again, thank you all for your participation, and we wish you all the best. Thank you everybody for coming and joining and contributing. Thank you so much. Thank you.